Quick update from Lazard Geopolitical Advisory as we head toward a key trade deadline on August 1st. So the good news is that we've gotten a lot more clarity on where U.S. tariff rates are likely to land. For emerging markets, a 20% baseline rate, and then for developed markets like Japan and the EU, a 15% baseline rate. Now, all that said, there are still a couple of key outstanding issues that I'm watching for corporates and investors in the weeks ahead. The first are the details on the Japan and the EU agreements in particular. Seems to be a bit of a gulf in understanding on the purchase agreements and investment commitments into the U.S. And frankly, these frameworks could fall apart as negotiators sort out the final issues. Second are sectoral tariffs. The U.S. has promised pharmaceutical and semiconductor and electronic tariffs. We're likely to see announcements on these in the coming weeks or month. And the size, the scope, and the implementation timeline of these tariffs are going to be critical for businesses in these sectors as they think about their own capex decision making. Third are the price effects of all of this. So the U.S. has just increased its tariff rate by 15%, from around 3% at the beginning of the year to around 18% today. Typically, a 1% increase in the tariff rate equates to around a 10 basis point increase in core inflation. And I expect to see this show up in corporate earnings and then ultimately passed on to consumers as businesses learn to live in this new protectionist paradigm. So, in short, some more clarity on tariff rates, which should be good for business decision making, but we're still in the early innings of the macro impact of all of this.